Hi, I wanted to show you what the numbers would look like if you bought a owner-occupied two-family property. Got one for sale in Methuen right now, 1 to 3 River Place, listed for $399,900. Quick glance of the details of it says that one of the units is a 2-bedroom, most likely the owner's or not, and Unit 1 offers a single bedroom, first floor living. So first thing I look at is what are the property taxes for the property, because it's going to be helpful in determining what the monthly payments are. So I scroll down, I see the taxes are $3,861 per month. So say you're somebody that's renting for $1,500 and you're looking to buy a house, but you don't want your payments to exceed that. Here's the workaround. So we've got a house, like I said, list sale price is $399,900. Financing here, we're going to go with the very conservative, lowest down payment option of FHA, which requires a 3.5% down payment. In this case, it would equate to just under $14,000. Got our interest rate of 4%. We've got a mortgage term of 360, which is 30 years. And we've got a net payment of $1,467.51. Well, wait a minute. How does that make sense? How is a $400,000 house with $14,000 down, monthly payment of only $1,467? Well, I want to show you. So the breakdown of how it all works is that you've got your principal and interest payment. You've got your property taxes, that's the $3,861 divided by 12. I've got a $100 placeholder for a homeowner's insurance, which would equate to about $1,200 annually. And then we've got PMI. PMI is private mortgage insurance and required anytime you put down less than 20%. Again, with this being FHA, the PMI is a little bit higher, but overall, flexibilities outweigh any of the risk with that. So we've got a total monthly payment actually of $2,567, but because we have another unit that's going to be generating rental income, I'm going to use a conservative amount of $1,100 for that rental income, be it for the 1-bedroom, or if as an owner-occupant you occupy the 1-bedroom and we're able to get maybe $1,600 for the bigger unit. Again, we're going to keep it conservative as if you're going to live in the bigger unit and rent out the smaller one for $1,100. So we're able to net out our total monthly payment of $1,467. So we have rent that we're paying right now for $1,500, or a mortgage payment where we're building equity, can share in appreciation and as the price of the house increases over time. But more importantly, another aspect to take a look at is that you've got each and every month that goes by, you're paying down the balance of your loan of roughly $565 per month. So if you take this, which would be like a forced savings, it brings your net monthly payment to $901. Again, we're still at $1,500 over here, but we've got a net of $901. So it's actually a complete monthly savings of $598. Again, you've got principal payment and your net monthly payment over your $1,500 in rent equals a positive net monthly savings of nearly $600, all for keeping your payment around the same. What does that look like in a side-by-side comparison? We've got $1,500 in rent, we've got $900 net payment for your new home. So we don't do anything. We sit back and we rent for the next 5 years, keeping it conservatively that the $1,500 a month in rent isn't going to increase. We would have paid $90,000 in rent over a 5-year period, or over this same 5-year period with this property, you would have principal reduction of $37,508.50. That's money that's in your account, in the equity of the property. That's cash. It's another asset that you have, whereas you wouldn't have this if you continue to pay rent. So you're talking about a $90,000 deficit or a $37,000 gain in 5 years. That's a giant swing. The total swing of $127,000 over a decision that can be made by just looking at things just a little bit differently. Hope this helps. Please contact me with any questions. Happy to help.